Welcome to another episode of the Weekly Crypto Check-In, recorded on September the 10th, 2025. I'm your host, Robert Swarthout, and joined by my co-host, Andres Sandate. How's it going, Andres?
Good, Robert. A couple of weeks since we did this, quite a bit going on. Some of the stuff we can dive into. Some of the stuff you'll have to just reach out to Robert or I to learn more about. But hopefully that's the cliffhanger. People will want to learn more. But yeah, it's good to see you. I'm wearing my my PG sweatshirt because it's fall and that means it's baseball season in Georgia. So
yeah, it's been oddly cool. Yes,
it's been beautiful. It's been beautiful out. Yeah, you've been enjoying the outdoors.
Yeah, I've been outside a bunch at this barn that we're working on, and this morning I went outside and I was like, oh my gosh, it's cold. I went back inside, took my shorts off, put pants on, and went back out. I was like, this is borderline too chilly for me in the morning right now. So
yeah,
I better enjoy it though, because I imagine it'll quickly change and I'll be complaining it's too cold.
Yeah. Anybody that's spent time in Georgia the last couple of weeks, at least in North Georgia where we're at in Atlanta, it's yes, some of my favorite weeks of the year. This early kind of early fall post Labor Day before the rains of November kind of hit. But speaking of crypto, wow, it's interesting. I felt like last year around this time we were talking about the election, and we were talking about what was going to happen, and
a lot of what ifs.
What if, and things like tokenization would come up every once in a while, and it would always feel like somebody was promoting a startup, or there was this idea of tokenization and the financial system kind of colliding. And here we are in our first update. NASDAQ files for tokenized stock trading.
Yeah, if you would have said this headline a year ago, you would have thought it was like some distant future, right? Not a year from then. But yes, they filed last week for the ability. They filed with the SEC to be allowed to have the ability to trade the stocks as they do today, and also a tokenized version of stocks that would be on a blockchain. I knew this day was coming. I guess knew with 99% certainty. But to see it finally happen, at least the request for it, this is inevitable. Everything will be tokenized at the end of the day, even your car titles and house deeds, like we've talked about. So this is the beginning of a long journey, and NASDAQ won't be the only one. But we are off, I guess, first step here.
Yeah. I thought what I would try to do to help maybe provide more color on some of these updates, because, what we're doing with the show, obviously, is we're taking some of the most newsworthy headlines from crypto and from digital assets and blockchain. For a lot of people, it still feels and seems very foreign. Most of the folks that would tune into the show, obviously, probably have an interest in crypto and digital assets. But I think one of the areas, particularly from my perspective as an advisor, but also working with you on the fund, is, what's the impact of these headlines on individuals, and particularly like those that are individual retail investors or financial advisors, and so I thought what I would do is sort of take some of these headlines and give that perspective. I think when people say tokenization, yes, it means that everything is going to get tokenized. I think that's a big headline. And this is, securities and stocks is the first of what could be many assets. I think for investors, the takeaway is this hopefully will reduce some of the barriers to ownership. If you look at what's going on, even with platforms like Robinhood and some of the announcements that they've made this week about creating a social network, and the ability for investors now to sort of open an account on their phone, right, on their laptop pretty quickly. This day and age of technology colliding, with almost every other industry, certainly has hit financial services. And so with tokenization, you could look at a stock that's quite expensive for most people and say, can I buy a share of, whether it's Alphabet or Meta or Nvidia, just picking a few. And for a lot of people, they'll look at the price of the share and they'll say, I can't even afford a single share. Well, with tokenization now, we could get fractional ownership, right? We could get, just a lot more accessibility to, if you will, financial markets. For the individual investor with tokenization.
Yeah, and I think, so that's the buying side of it. I think the selling side, I think, is what's going to accelerate is this whole, what used to be T+3, now it's T+1, the DTCC. So the one that basically the agency of record,
the settlement.
yeah, for settlement, I mean, we can get to the point where it be potentially is instant settlement. I mean, that's what a blockchain basically is. But to kind of tie that in with stocks would be really cool. And then you can go even a step further. This could be 24/7, 365. Whether we want that as a society, who knows? But that's the way the crypto world works. And to think that a stock would be any different on a blockchain probably is not too far in reality.
Well, I think the last thing I'd say is relative to financial advisors, right? There was a big evolution in the financial advisor world over the last 25 years with the sort of advent of exchange traded products, also known as ETFs, right? For years and years and years, it was, SMAs, separately managed accounts, mutual funds. There's still, both of those exist. But ETFs, right, have obviously taken financial markets by storm. And, for many advisors, they've reduced all kinds of friction that mutual funds, while still very viable, caused in terms of managing portfolios. So I feel like tokenization is another big step for the financial advisor community in terms of products. Still a lot to be sorted out, but certainly a pretty major step as this big major exchange, files with the SEC for this pretty monumental.
Yeah. And I don't know what kind of review cycle is going to happen with this kind of request. I don't know if it's going to be a month from now, we get a yes or no, or it's a year from now. I have no idea. We'll have to find that out. And maybe we can report back.
Yeah.
So our next topic is about a conference/event that happened out in California called Future Proof. I know you've been following this one a little bit more than I have been, but you have any comments or thoughts around this one?
Yeah, Future Proof has become a pretty popular series of events. There's two of them now, and one's out on the West Coast in Huntington Beach, and they literally have it on the beach. So it's a much different conference. There's still people going around in suits and ties, but you see a lot more people walking around in board shorts and and t-shirts and flip-flops, and that's kind of the whole vibe, is to try to introduce sort of a different conversation to the financial services community. Obviously, you still have your major players primarily focused towards the advisor community, financial advisor community, wealth management. A lot of the big names, that you'll see out there, the major platforms, Morningstar, asset managers, but then a lot of advisors and investors, right? Interestingly, this year, from what I saw in the sources, a lot of conversation out there about crypto. And so I thought, the takeaway here is, yes, there maybe is a discussion going on even at sort of some of the leading edges of the financial advisor community. But when you dig in and sort of peel it back and say, what has been adoption to crypto? It still remains primarily, Bitcoin and Ethereum, ETPs or exchange traded products or ETFs. Many advisors are still not using individual or accessing crypto with, individual tokens. One thing that's made a lot of headlines recently are these DATs or DATs, which stands for Digital Asset Treasury. So there's no shortage of innovation, I think, when it comes to products being created by Wall Street, particularly around this new asset class. But it still, I think, remains to be seen what the adoption curve looks like for advisors. Even again, when you look at a conference that sort of bills itself as the evolution of what the advisor profession is, Future Proof. They'll be doing an event next year, early in the year in Miami, and that one's all built around AI and how advisors need to really think about adopting AI and utilizing AI to stay relevant. So yeah, it's kind of fascinating to see the the major players are moving into alternatives, and that's been a big area and that's been a big focus. But I think the jury's still out, really, with all this regulation and all the things that we are going to talk about, even today. I think the advisor community is still waiting to see, somewhat sitting on their hands, I would argue, in some cases, before, they're ready to really adopt digital assets, as part of like the model portfolio.
Absolutely. You said something there that made me think. So you said what the curve looks like for adoption on this. There is slight adoption. I mean, very, very little, basically, effectively zero. But imagine if you zoom out over time on this thing, it's going to look like a right angle, right? There's not going to be much of a curve to it. And again, I keep going back to it. The market, we need market regulation. We've talked about this ad nauseum, but I think we will soon potentially have that, and then it will be, it takes that risk a little bit off the table, because most RAs are, fiduciaries, right? Like, so they have that angle. So
yeah, it comes back to safety and accessibility and really fiduciary responsibility. Those are key things, right? So not to harp on my fellow advisors, I think that nobody really ever got fired, as they say, for hiring IBM, right? So while it does appear that billions and billions of dollars are being held away by or are being invested away from advisors in custody, houses like Schwab and Fidelity, those firms are starting to, put together platforms where they're going to welcome and embrace crypto over the next year or two. So I think that the news updates on this will continue to appear in our, in our shows. But yeah, that's future proof. So I didn't get to go this year, but who knows? Maybe one day in the future, you and I will do this live from the beach in California.
We can put some wave crashing in the background, act like we're there.
Yeah.
Cool. So kind of along the same topic, this, like we were alluding to, market regulation. So what's the state of the Clarity Act? Well, late last week, the Republicans in the House Financial Services Committee released their first, revision draft of the market structure bill. And it generally was well received. It didn't seem highly political one way or the other. And then I guess fast forwarding roughly into this week. So on Monday or Tuesday, a coalition, I believe, of 12 different Democrats kind of came up with their list of things that they wanted to see added or tweaked in the bill. I think the headline here is, we're not far apart. The two sides seem like they're, they could even reach across the aisle right now and shake hands. They're close, which was, in my opinion, a huge relief, because I was like, this thing could drag out. And, who knows? Because the Senate was going to be the hard portion of Congress to get this through. And we are close. But, some of the points, we're not going to go through all of them, but they want a clear spot market given to the CFTC. I find this highly ironic coming from the Democrats, because they spent the last 5 years saying the SEC should be the one dealing with crypto. Set that aside. We have at least a clear an agreement, effectively. I mean, because that's what the Republicans also want to see. But we were talking before we recorded about what may be the biggest sticking point here, and in my opinion, it was the one added where it prevents corruption and abuse by restricting elected officials and their families from issuing or profiting from crypto projects while in office, and requiring disclosure of their holdings.
Yeah.
This is the "we don't want Trump in crypto" bullet point, or the Trump family bullet point. But it's I guess they had to ask. They couldn't just like let it go. To their credit, I suppose. So.
Yeah. No. I mean, I think you bring up like the topic that could consume the rest of our show, right? In terms of just this highly divisive point in time we find ourselves in, just as a country, and it's really about trying to figure out where can we take this industry forward, right, and not get held up on politically highly charged political elements, let's call it elements of the bill. I'm not making light of it, right? But we've had, like you said, like we've had insider trading, if you will, and we've had, politicians front running, if you will, the market for decades, right? Maybe for generations. I don't know how far it goes back. But it's it's my hope, I guess this is more commentary. It's my hope that we do get, this bill through, and we don't get mired in, in a lot of finger pointing, and let's just call it, sort of political retribution over the next, few weeks and months. Because those first 2 points are evidence that there is a market out there waiting for, really the, I would call it just the further explosion of this market in a good way, right? And all the innovation. So I'm just optimistic that we'll be able to, make headway and get this bill, on the desk of President Trump for signature. It's going to be messy to get there. No, it always is. But hopefully we'll get this market structure bill done. And I think when that happens, we'll see just a flood of additional innovation taking place.
Yeah, and from a timing perspective, midsummer, I kept hearing that maybe by the end of September there could be a final markup done, and it seemed like not going to be a reality. Well, possibly. I mean, like to see the
Yeah.
sides not too far apart, and we're not even halfway through the month, so we
Yeah.
might get there, which means that we might get this thing done this year.
Yeah.
I don't want to you know uh, count it done before it's not, but it's we're getting close. So
Yeah.
anyways, kind of moving on here, and this one will be a rather quick topic. So the CME Group has different uh, futures contracts that they offer out there in trade, and surprisingly, XRP. So the futures contract around XRP was the fastest ever to 1 billion in open interest. I assume this is scoped around just crypto, but to think that it beat Bitcoin or Ethereum was surprising to me. I believe in what the XRP ledger and Ripple trying to do, but this one was not something that I would have bet on. So
Yeah. I mean, I think the takeaway for retail and advisors is, two words, liquidity, and I would say, price discovery. And what that means is, you have deeper markets, more liquid markets when you can add more of these options and derivatives to, let's call it the primary asset. So a lot of future strategies are used for risk management and for hedging, particularly from the institutional investor. They are quite complex products, typically not used a lot by retail investors. But I think the participation of institutions in like this XRP futures contract demonstrates that, number one, the market participants recognize the potential, but also for retail and for advisors, it should flag, in a good way that there's more liquidity and there's going to be better price discovery of these assets over time. So yeah, kind of technical, if you will, when you get into the weeds, but nevertheless, like a really important headline from the standpoint of just the maturation of the space and the market and this particular contract.
Yeah, and I think that I guess we'll tie this together. Like, why does this kind of matter? So the SEC had said that they wanted to see 6 months of coverage of futures, specifically on Coinbase, but I think that they were also using an eye towards the CME Group as well, to allow an ETF product to be, I guess, streamlined process launched. So it looks like this is yet another checkbox in the XRP case. The Solana volume, I guess we should mention, has also been strong, and both Solana and XRP have a bunch of applications that are kind of bundled around the same time in mid to late October. That it seems like we might get a ETF launch for those two tokens, potentially HBAR, but probably just those two, be my guess at this point. So we're inching closer, and then it's just going to be like everybody and their brother wants one of these, and it's just going to be. We may just have to have a separate podcast that just talks about ETFs at some point, because there's going to be a bunch of these.
Yeah, no doubt about it. Well, Bloomberg has its own. I don't know if it's Bloomberg. I guess it's might be Bloomberg, but one of the networks has its own ETF show now dedicated to it. It's such a
thing.
Yeah, such a thing.
Next topic. It's our friends over at the Federal Reserve are setting up a payments conference, specifically about payments innovation and about real-time settlement and all the things that crypto likes to be. And they're inviting the industry in. This is the same group that was functioning part of the debanking of crypto over the last 4 years. So now we have done a 180, and now we're being invited into the hen house. So
right. Yeah, I mean, this is all about like the flag has changed, right? So all these organizations and government agencies, et cetera, now have to have a different playbook, right? Because it's almost like if you're not at the table, sort of guiding regulation, guiding the conversation, if you will, and setting up, if you will, who's there, you're going to be the organization that's going to get debanked and left out, particularly under this administration, which is just moving at lightning speed to try to just change the old way, if you will, of doing things. And old doesn't mean it was wrong or broken. It just, there's so much technology and innovation happening around all these institutions that I think they're being forced to play to some extent some catch up. And like you said, have to pivot pretty hard from maybe the standard operating procedures just literally months ago. So right. I think what it means for investors is hopefully, better custody, better settlement. Like you said earlier, maybe we go away from the T+3 when it comes to settling, just a simple trade on a stock exchange to instant settlement, right? So I bought it, now I own it, right? Not I bought it, I sent my money, 3 days later, I get evidence that I own it type of thing.
Yeah.
So,
and in that case, people typically care about the other half. Like, I sold it, where's my cash? Like, that's the part that they want to know.
That's right.
About.
Yeah.
Anyways, So I guess the last piece here is the Federal Reserve is also talking about tokenization and AI mixed in it. So this is going to be a very tech forward conference for them, I'd imagine, on the grand scale of what Fed conferences look like. But
I can assure you of one thing: they won't go as far as holding it at Huntington Beach, like future proof. It'll probably be, inside of a granite building somewhere. But they have a newly renovated building, from what I'm hearing. I don't know if it's done, but hopefully it's finished in time for this big event. So
yeah. Well, cool. Our next topic is talking about this SEC and the CFTC. They issued a joint statement saying essentially that they don't see anything in the current law of the land that prohibits them from regulating the crypto industry, whether it's securities or non-securities. Again, this is the exact opposite that we've heard for the last 4 years. Now they're saying that it is clear and we do have the authority, and we are getting to do it. So they say they're going to work together. They want to provide clarity. This ties back into the market structure bill. Like, this is all kind of the same problem from different angles. And, I think at the end of the day, the CFTC is going to get spot crypto exchange because it's going to be commodities. And part of the market structure legislation is going to help define what is and what is not a security, probably put some very, hopefully, clear rules around that. Hopefully a small set of rules too. We don't need a long list, and get to go from there.
Yeah, I mean, it just, again, kind of come back to what we talked about several times with today's update. A lot of this is around, I feel like some of these agencies playing a little bit of catch up and needing to, get aligned in order to keep things moving along. And a lot of it, hopefully ends up benefiting investors at the end of the day, and consumers. So whether that's, quicker settlements, lower prices, better access to, to financial markets, all of that has to follow from regulation, however. So I think a lot of this stuff comes down to how are we going to define what the sandbox looks like, and, what are we going to allow inside, et cetera. And then, hopefully some of the potential and additional promise of this space will get unlocked, as we said at the opener.
Yep. So our next topic is kind of cool to see this come back up. So if you've been in crypto for a long period of time, there's a good chance that, and you were buying tokens that were maybe not in the top 10, that you likely were buying those on an exchange that was not based in the US. So Coinbase, Kraken, obviously based in the US. Binance is obviously the biggest worldwide that everyone would know about. They have a Binance.us website, but that hasn't existed forever. But this whole idea now that with registration, so with the Foreign Board of Trade, so FBOT, these foreign exchanges could register to service US clients. This is an undoing of stuff that happened over the last 4 years, where basically they were run away because they're basically going to be sued into oblivion. So they just dropped US customers and ran. It's cool to kind of see it because, again, you could buy certain things in certain stores. Why can't you go to different exchanges and buy something that they choose to list? So just more cleanup, in my opinion.
Yeah, I mean, ultimately, if you're looking at this from the standpoint of an investor or an advisor that's looking to transact in the space, the idea is you want to be able to go to an exchange and know that your money's safe, and know that they're not taking your assets and doing the things that got this whole industry over in multiple cases, right? We've had multiple exchanges that just blew up, right? Where they were basically taking investor capital and assets commingling it effectively, creating all kinds of leverage, and or just outright stealing and committing fraud, right? So those were some of the bad examples. Some of the better examples, like you said, were just, maybe they were exchanges and they were platforms that were just providing what they wanted to provide was a better solution. They just couldn't get traction, couldn't get, aligned with at the time, like the regulatory framework. If all those platforms come back, right, and if all those boxes are checked, they apply for the right licenses, they go through the right regulations, assuming we can give them a framework and we can give them rules, is it ultimately better for the customer, if you will, or and do you see it as just being so overwhelming because all these participants flood in to the marketplace?
To me, as a free market guy, like the more competition, the better.
Yeah. No, I get that. It's like you want to buy a car in certain parts of Atlanta, but you got to drive to certain dealerships to kind of haggle. And then the internet came along, and now it's like, I'm going to take control, right?
Correct. Yeah.
So I'm curious how this whole thing plays out, if I'm just trying to get involved in crypto.
Yeah. I mean, to me, the obvious is, and I talked about it when I first was mentioning this, is Coinbase or Kraken, they don't have all tokens ever listed as options. We'll use KuCoin out of South Korea as an example. They had a wide selection of tokens, many of them that were not on the U.S. exchanges for different reasons. And then, like, if you wanted to buy it, that was kind of the only way to buy it. So I think that's the most obvious example. Just more access to more tokens. And I think just general pressure should help the fee side of things. So, like, admittedly, Coinbase is one of the most expensive places to buy crypto. And, over time, do they see pressure because there's other exchanges that show up on the market? Because it's really them and Kraken right now, and maybe crypto.com, but there's not tons of pressure from a fee side, at least for the general public right now. So,
right. Yeah. I mean, so it, if you compare it to stocks, it used to be, you called your broker. The broker got a commission, right? And whatever that commission was on your stock purchase, like that's what, paid that broker. And, that was a movie made famous by Oliver Stone, right? With Wall Street, right? With Bud Fox, right? The fictitious character. Fast forward to online brokerages, right? And that was like revolutionary. When the internet comes along, you could go to your E-Trade account, you could enter a trade and pay, $6.95 or whatever it was at the time. And now you can pretty much, open up an account anywhere, pretty much any bank, and trade almost for free, right?
For free and basically everything.
And everything, right? So, I mean, I'll be curious to see how this, evolves over time. But it's not going to happen again without regulation and without, these exchanges, if you will, going through, I would think, some process which needs to be put together for them to be regulated so that they can start serving more customers here and providing more choice.
And this is probably a great segue too, because more institutions. So institutions coming into crypto is our next topic here. More access is not just going to come from the crypto players. It's going to come from traditional finance. Is really where it's going to come from, because that's where money that's in 401ks and brokerages, that's where it's at. You start giving access to crypto or just alternatives just generally, and the next 10 years is going to be pretty eye-opening for what the quote unquote model portfolio or what the average portfolio looks like. All that kind of stuff is going to be so drastically changed, I think. Tokenization is going to be a huge driver of that, because it's going to allow things to be on a blockchain that weren't necessarily there natively, and kind of have access to trading and using as collateral and all the different things that crypto can do for you. So
yeah, I mean, a couple points from an advisor or investor perspective. I think there's still a very open debate out there about whether Bitcoin is this asset, let's call it that, is digital gold, right? And that's beyond the scope of our show. But I mean, I think my takeaway, as more institutions move into crypto, what happens, I think, with something like Bitcoin, which has dominated the narrative from the standpoint of a token, is that you get a lot more credibility, liquidity, you get more infrastructure, you get a lot more eyes paying attention to stuff. So you don't get the wild swings, also known as volatility, which is,
Right.
in addition to the lack of regulation, the volatility has been one of the reasons a lot of retail investors, and more importantly, their advisors who guide the financial decisions for, millions and millions of Americans in retirement. That's volatility has been one of the biggest challenges around crypto. And unfortunately, most advisors, I would say, when they hear crypto, they immediately think Bitcoin, even
Right.
though, right, there's thousands of other tokens out there. So
Mhm.
I think, yeah, to your point, like institutions moving more into the space, I think it creates more product, it creates more liquidity. I think it brings down some of the volatility that we're seeing. I think it starts to introduce the notion of where does this fit into a portfolio? How do
Mhm.
you integrate this into a portfolio with stocks and bonds and real estate and private equity and private credit, all of which is I think just it remains to be seen. But the more participants in the market, I think the theme of today is just as we see more regulation, as we see these frameworks come together, it's going to bring more participation to this market. And I think with more participation, more eyes, more oversight, hopefully more choice, lower prices, more liquidity, blah, 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 blah for investors.
Absolutely. Yep. Well, I think that's a wrap on the show. But before I do my sign off, those that have watched or listened to this on LinkedIn, if you do us a favor, you go to the Teton Crypto Capital page and give us a like. That'd be awesome. I realized the other day there's a lot more of you out there watching and listening on LinkedIn than I had even thought, which is great. So we would love that support, and it would help us grow the show. So thanks for joining us on this episode of the Weekly Crypto Check-In. To stay updated on future episodes, you can find us in any podcast player or LinkedIn by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.